coming in. Well, staying with the pharma space, we now have with us Neeraj Sharma, who's the Managing Director and CEO at OneSource Specialty Pharma, joining in to talk about their Q4 numbers. Mr. Sharma, welcome to the show. If you could just start by giving us your performance on the margins, which was spectacular this quarter, over 40-odd%. What led to that improvement from, say, that 36% in the previous quarter? And what is the trajectory that we expect in FY26?
Yeah, thank you for having me on the show. So we have had a very robust quarter, but not just the quarter. We have had a very robust year, and a number of factors which have actually helped us increase our both revenue as well as profitability numbers. We have, as we have said, we have added a number of new customers, and added to these customer acquisition also are significant MSA executions we have done. A significant part of our business is coming from drug-device combinations, and here we have had a lot of new MSAs which we executed, especially our customers who are planning for second wave launch, especially of Semaglutide in the next year. So combined with our other legs of the business, especially our soft gelatin capsules, our sterile injectables. So all put together, along with the new acquisition which we did of customers, what has really helped us drive both our revenue and our margin. And we see this trend continuing in terms of the guidance which we have given. We have reaffirmed our midterm guidance, as we have said. We are going to be a 400 million revenue company by 2028, and also with a very strong 40% EBITDA range. So we have reaffirmed that, and that also all these factors which I mentioned are continued expansion of our drug device combination business. A lot of it getting commercialized, actually starting from the current year or the latter part of current year itself, and then going steady state in FY27 and beyond, especially on Semaglutide coming off patent in some of the large markets. Our soft gelatin business, where, as you're aware, we have expanded our capacities 3x over the last year, and a lot of new CDMO business coming on this. And finally, the sterile injectable. So all in all, coming together to deliver our midterm outlook, which we have given for the business.
Okay, all right. Well, your midterm guidance seems to be quite strong, but I'm just going to narrow down on the opportunity from the entire weight loss drug scenario, with Semaglutide going off patent in a couple of countries in the next year odd. What is the opportunity in terms of financials which is lined up for you? Which are the companies that you have probably tied up with in terms of the Semaglutide opportunity?
It's actually 100 plus countries actually which are going off patent next year. But the key ones which are very significant today are Canada, Brazil, China, India, and some of the countries in the Middle East, we have significant populations today and significant markets. And these are the ones which are going to be really driving the near-term numbers for us. And while obviously as a CDMO I can't share the names of customers, but I can tell you we have a very, very large and diverse customer base. We have said 20 plus customers who are with us for GLP, and these customers are really the who's who of the global generic industry, including global leaders, regional leaders, country leaders. And we see that with these customers of ours, we will be able to support them.
Sure, Mr. Sharma. Mr. Sharma, just a two-part question. One, how many suppliers or how many CDMO suppliers would be there typically for one generic company which is manufacturing Semaglutide? And two, do you see maybe the market shrinking for Semaglutide simply because there is going to be a lot of generic competition come through, and there are far superior molecules now which are under patent, which are in the space?
first question, to get a product like Semaglutide to develop and to get into the market, a company spends anywhere between 25 to 30 million US dollars. So, with this significant investment, and it's a complex product, it's not a product where there are multiple suppliers for a company. So we expect, all our customers, us to be either the sole suppliers, or in some cases where, some companies might want to take some capacity in-house, we would still remain the principal supplier. So I think that's where it's not an area where you can have multiple suppliers for a company or for a product like this. That's the first part. And when it comes, where you expect Semaglutide, what's happening in the market, I think right now there is such a huge demand-supply gap for this product. There is a significant market out there, whether it is for diabetes, whether it is for weight loss, the anti-obesity, and the supply from the innovator has been absolutely minuscule. So just to give you some figures here, in a large market like Brazil, less than 1% of the potential target population is having access to these drugs today. In a market like Canada, the same number is about 3 to 4%. So as you can see, there is a significant unmet demand, which is what is going to really be driven when the generics come into the market post market formation and patent expiry. So we see that to be driving over the next 4 to 5 years.
Right.
Not only companies like OneSource, but all the generics who will get into the market. To your point on other new therapies, for sure, this is an area which is revolutionized. Remember, there are 1.5 to 2 billion people potentially who could benefit from these drugs. So every new therapy or every new drug which comes into the market is welcome, including some of the oral therapies which will be coming. So it's I think this is a revolutionary therapy, and it will be very helpful to people. And OneSource is really poised with our experience, with our expertise, with
Mr. Sharma, we get that.
We are very well placed.
Right, we take that, Mr. Sharma. Just a final question before we let you go. You've announced a capex of about $100 million as well. What does that entail in terms of turnover ratio? How much do we typically garner of the capex that you do? That's point number one. And secondly, you did 32% margins in FY25 with a long-term guidance of 40%. By when do you reach 40%? I mean, if you have a glide path to that. So on margins and capex, the asset turnover, quickly.
Yeah. So we have already said that we'll be spending almost $100 million over the next 2.5 years. This primarily investing in expanding our drug-device combination, drug-device combination capacity, which is what we really need to service our customers' demands. And this is a very, very attractive business. We are right now, we have closed FY25 just under asset turn of just under 2. And we see that, in near term to be at least 2.5 and a steady state asset turn of 3. That's what we are aiming for. And in terms of margins, we have said, you've seen how our margins have expanded, and we expect the 40% steady state margin. It's not far. We have already said that our first full year of commercialization of Semaglutide will be FY27. So for sure, FY27 and beyond is a 40% plus steady state margin, what we are aiming for.
Okay, just before we let you go, maybe a one-word answer from you. Out of, say, the number of companies, looking at Semaglutide, if you could name the number there as well, how many do you have in terms of, say, a percentage or an absolute form in terms of being the sole supplier or principal CDMO supplier?
So there's no one word. As I said, we have our customers, we have global customers, and through those customers, we expect them to have a very significant share of all the markets which are opening up in 2026.
All right. Take that point. Thanks a lot, Mr. Sharma, for joining in. Wish you good luck. We'll speak to you at the end of the next quarter as well. Once again, quiz you on all the things that we spoke about today as well. Take a short break, come back, focus on the markets as well. The Nifty down about 75 points. Sachidanand Tekar joins in with some trading strategies on the other side.